So hello and good afternoon. I welcome you to today's special webinar exclusively for JFD brokers, how to trade the market opening of the US market. So we are 1 minute late. It's my fault because I was
So hello and good afternoon.
I was listening to the press conference with Mario Draghi, and in fact a few minutes ago. So if someone listened to what Draghi delivered so far, you will have found out that his answers went quite long, let's say. And it's very interesting, nevertheless, what he started to talk about several seconds ago, because he was referring to three reasons why the volatility in exchange rates, especially in the euro, obviously, and why the euro headed higher took place. And first of all, market reaction is very interesting. He's not down talking the euro that much, but in fact, euro is shooting higher, trading above 125 right now. So really, yeah, aggressively pushing higher, while the DAX has problems now and is aiming for the intraday lows. So in fact, things are getting really interesting because the last comments from Draghi were clearly targeting here the US administration around Donald Trump. It was a very clear statement, I think. And this is getting interesting now. So first of all, here is the definition of the open range breakout setup. We will have a look at the US market opening in a few seconds. But I think based on the current situation around the ECB, we should definitely have a look here at the developments in the market. So first of all, let's have a look at the pure technical side here before we go into further details on what I just introduced here regarding the words Draghi used. I think it's, in fact, the more I think about this, the more shocked I am somehow, because Draghi was really balanced all the time. So very relaxed. So if you listened to him for several years now, you never had the feeling that he went, emotional is the wrong word, but the way he just announced or answered this question was quite direct. Let's say but first of all, let's have a look at the technicals in the DAX first, which is obviously impacted here more aggressively by the current developments in the market, based on the fact that we're talking about the ECB and a strong connection to the euro. So in fact, there is one key region. If the market can stabilize, if the euro can stabilize at the current levels, which he just pushed to 125, and can regain some momentum here on the upside, after falling quite aggressively in the afternoon yesterday here, if we can make it above 13,440, 13,450 points, I think then we have a good chance to make it back towards 13,500 and higher than that. The thing is that so far, Draghi failed, let's say. Let's put this in quotation marks here, but Draghi failed somehow to down talk the euro, and instead the euro is losing most of its gains it made over the last hours here before the ECB. And it's mainly euro driven, obviously. Euro is just pushing aggressively higher. You can see by the flashing candle here that obviously there's a lot of trading action going on right now. No big surprise. You can see also here that this push is obviously happening. By the way, I think there's again one problem here with that. Yes, definitely. So if volatility is too aggressive, in fact, the market then starts, or no, this platform has some trouble to really follow the price action. That's an issue of the charting tool. So in fact, right now we are not trading around 124.95, but we're trading at 125.20, and that's definitely something we have to look over here. So currently, as you may know, I'm trading a systematic approach in the DAX. So you'll see a long position I have on. Point, and now it should have no, and it definitely has no implications on the long-term profitability of this approach I'm trading. So I'm just changing this here, since it's not a 5-minute chart but a daily. And so what we want to look at is the development in the euro here. So you can see this there. You can see that the euro right now is trading above 125. Therefore, I have to say DAX is quite stable. And if the euro finally finds some kind of resistance on the upside, wherever this might be, and comes down a little, this could then probably drive the DAX higher too, even though currently it doesn't look very promising, to be honest. Because now we come to the interesting developments and the mentionings from Mario Draghi several minutes ago. That was a very aggressive step again. So now let's come here. I've already prepared this. Let's come over to the comments. And therefore, I switch over to my Twitter account, since it's very easy to just retweet it here and have a good overview already on what was just communicated. And obviously, I'm using several sources here. So first of all, the rate decision itself. ECB keeps key rate unchanged at 0. Deposit facility rate unchanged. Marginal lending facility unchanged. And asset purchase target unchanged. Nothing happened here. No big surprise. No volatility at all. Not in the euro. Not in the DAX. Nowhere. But then the press conference starts. ECB Draghi. Recent forex volatility is source of uncertainty. No big surprise here too. This is something which was already communicated from the ECB here and several officials last week. And so it's just Draghi is using the same rhetoric here in the statement from the ECB. ECB Draghi says that some data points show a solid and broad growth, which means that the overall developments, which are probably one of the main reasons why the euro exchange increased here, is because because some data sets are just coming out better than expected and showing some solid growth. That's also one point which we will mention soon and in a few seconds here. Then it's also that Draghi says the momentum could lead to positive growth here, and which could surprise in the near term. Okay, very, very cool. Nothing big here. All in all, it already drove euro higher, in fact. ECB Draghi headline: inflation likely to hover around current levels in coming months before increasing again. Probably here he is referring to the developments in the oil price. So where are we here? Oh, I'm sorry. This is still the 50-minute chart. So no, that's let's have a look here at the oil prices. So oil prices are rising. This is something where between the lines, he somehow probably hints towards oil price developments that inflation could pick up. Yeah, obviously, opening not dovish enough for the euro. Euro spikes higher. Here, this is a German quote from me. That's in terms of my expectation for the DAX, where I already point out 440, 440.50. Above which we could then target 13,500 points. And now it's very interesting. It's getting really interesting. There was one question from one journalist who asks in terms of if there's any let's call it favorite. Okay, that's how he answered the question. Favorite when the ECB buys their bonds. Draghi says no, that's not the case. In fact, there's an interesting chart then here, which shows obviously bonds from Italy and France are definitely quite aggressive bought, while here, for example, Germany and Netherlands are dropping, at least here, while Spain is overtaking Germany and the Netherlands here, while small countries are sold. So obviously, if you look at this, especially at this development here for the small countries, so small countries like Slovakia and that stuff, then we obviously see that we are focusing on especially the 3-4 biggest economies in Europe here, especially Germany, France, Spain, and Italy. So in this context, it's an interesting answer here, at least, even though that's not a big deal. Then also interesting, I would interpret this here as kind of at least trying to down talk the euro. So he says that the ECB hasn't discussed the link between inflation and QE. So what you could do here that way, what you could try, what the ECB probably tries is to somehow hint that if inflation does not pick up, the ECB will continue with their asset purchases way beyond September 2018. He also emphasized that here they will leave the current rates at the levels, at the current levels, well beyond the end of the asset purchases, while not mentioning when it will end. So, and now things start to really get interesting. And these are these quotes here. So first of all, what's the reason for the push higher in the euro? Well, obviously, it's the improvement in economy is one reason. Okay, and now the second one, rate exchange is heightened market sensitivity to perceived changes in ECB comments. Okay, so everything around potential reduction of asset purchases, improvement in the economy, and so on is probably a reason why the market starts to anticipate a more hawkish course of the ECB. I'm sorry, in the next upcoming months here. And now the third thing. This is really interesting. Again, Draghi says the third reason is use of language in discussing FX developments, which does not reflect the agreement terms of reference. Where is he referring to? There was a meeting. Not sure. I think one second, probably. We'll do it that way. Meeting EVF. IMF, I'm sorry. EVF is a German version for that. IMF, Draghi, probably it was Washington. Did I get this right? I'm not sure. Let me just see. I'm sorry. So I just I haven't written it down, but he was referring to an agreement between the parties who are participating here in this meeting, and they clearly agreed on not trying to down talk their own currencies. So, and they were addressing that, and it's the complete difference. A complete opposite was what Mr. Steve Mnuchin made here yesterday, which caused the US dollar to drop that sharply. So let me just scroll down here a little. Let me just see whether I can find this. Where is it? Here. Mnuchin, the finance minister of the US, talks the dollar down aggressively. So he said that the weaker US dollar is good for US due to trade opportunities, and was in fact was then also forced somehow, let's say, to make sure that people understand what he was talking about. So the chief of the IMF, Ms. Lagarde, in Davos currently with Mnuchin, said that he should please tell what he's talking about here, and so this is showing that obviously the Trump administration here, the White House, is obviously going heads on into the world here and showing their statement, America first. And this is something which is causing some fear at some point, because now potentially a chance is increased that there's probably a trade war coming. So in fact, I was wondering in the morning already, what was the main reason for especially Mnuchin yesterday talking down the US dollar that much and resulting in such a huge drop here on the downside. So what was the main reason for that? And in fact, there are several reasons, which we already mentioned several times in the daily morning meetings, which take place every day at 10:30 a.m. GMT in the YouTube channel from JFD Brokers. So we were here talking about, for example, the flattening of the US yield curve. And this usually indicated in the past, at least, that the US is about to drop into a recession here. So during this, where that said, there are several other developments which are not really nice at all to the overall conditions in the US economy. So while the data is still fine and not showing any signs to any reasons to be scared about something here, the fact that, for example, around 2 weeks ago, the Chinese talked about reducing, probably ending their current buys of US T-notes here resulted in US yields here to aggressively rise, as you can see. So that was a daily chart. I'm sorry. So here that was around here. That was on the 15th of January and also before here. And we pushed to a level where now several market experts start to say, well, this could definitely cause some trouble for the equity markets based on the developments of this ultra loose monetary policy over the last years, which resulted in the NYSE leverage to increase to absolute all-time highs. So that means if yields rise here too aggressively and too fast, it could result in this bubble to probably rather sooner or later burst here. So in combination with the current low volatility at the equity markets, this is a development, especially in the volatility here, which was aggressively shorted, while equities were driven higher. Just therefore have a look at the Dow Jones, for example. So I'm jumping a little between the markets, but it's definitely worth noting that these developments here, and now on top of that, a rising oil price, are causing potentially trouble for the US economy in the near term. And if these developments all take place within the upcoming months, I think this could really make this has really some potential for bigger trouble in the broad financial markets. So meaning an oil price, probably right now we are not talking about this, but why not an oil price pushing or see a push up to 100 USD per barrel? Why not see, for example, yields in 10-year T-notes push to like, I don't know, 4% or so. And here also see probably a more significant pullback in US equity markets. And all this said, I think the comments from Mnuchin yesterday, which pushed the US dollar even further down. Look at what happened, I mean, over the last 12 months. So after the election of Donald Trump, the speculation in terms of especially fiscal stimulus drove the US dollar higher on a broad scale against the euro, against the dollar, Japanese yen. Euro USD was trading around a parity here. And it was all based on the fact that Trump announced to make America great again, to bring jobs back to the US. The only problem you have, if you have those jobs created in the US and you start to produce goods here in the US and you want to export them, well, a too strong currency is just counterproductive here, meaning you have somehow to make sure that your currency weakens. And this is something which worked out really well over the last 12 months. Look at how weak the US dollar currently is. So we are trading at the lowest levels since 2014. And obviously, the US has not yet enough. So the White House, respectively, their representatives they don't have yet enough, but they want to profit from a weak US dollar. So looking at this development here, I think it makes perfect sense, but also shows some kind of fear in the White House or in the US in general that probably we are about to see a quite significant setback in the developments in the economy. So with this said, it makes perfect sense to down talk the US dollar. And it's, again, even more interesting that Draghi now steps in here and says, well, guys, we had a decision, or we decided to communicate completely different here. And this development, if you look at this, the current move, so this is the daily chart. We can also go down here, let's say, to the hourly chart. So this is definitely something to worry about. It's not okay that you're down talking the US dollar. And somehow, I have to say, that's personal feeling. I'm probably, let's wait some minutes probably right now. Things are quite fresh. Probably it will all relax, let's say, in the upcoming minutes to hours here. But the third reason, which is again mentioned here, so use of language in discussing FX developments doesn't reflect the agreed terms of reference, somehow means that there is something around the corner, and that probably not just the Europeans, but also probably the Japanese, probably also the Chinese are probably willing to step up and say, okay, if you weaken your currency and you want to start, in this case, a currency war with us / a trade war, well, it's something we can do ourselves and start to aggressively weaken their currencies again. And this is then something where you say, okay, short term, it's probably bullish for equities. In terms of, for example, the DAX, that means nothing more than I think we have a good chance to probably also short term, if this feeling really established now in the upcoming hours with U.S. market opening, we can easily push higher from the current levels, probably finding support here and then seeing new all-time highs, even though it's also causing difficulties for the midterm perspective, since seeing such a trade war, or respectively currency war, developing here with a quite aggressive rhetoric between the political leaders of several countries is something to worry about, and it could then definitely cause some bigger volatility also in the US equity markets, respectively in all equity markets in general. So it's probably right now still quite stable what we get to see here, but nevertheless, if the markets see the same developments as I see currently here, it's potentially a good reason or good potential trigger to or for bigger volatility in the upcoming months. And by the way, it's very interesting to note, especially in terms of the euro. That's one of the reasons why I think you should be really, really scared of seeing, as if you're a bull and you're trading long, you're seeing a very nice development. No, again, let's go over here. So you see a very nice development. It's perfect to see the euro pushing higher, but nevertheless, I'm not sure whether this is really a sustainable move, or we're probably about to see a larger pullback in the upcoming days. That has not just to do with the comments from Draghi today, but also with the fact that in Germany the political landscape is definitely a good reason to be a little fearful, let's say. Now that has something to do with the fact that last weekend the Social Democrats here in Germany, they decided to at least talk with the Christian Democrats on a coalition, on a grand coalition in this case. And so far, everything seems to be fine, but it was a very, very close call. And the interesting thing about this is, in fact, that I start to really doubt that if they work out such a contract here, such a coalition contract, that it will make it through the SPD. Because so this is the Social Democratic Party, because the thing is that they have a vote on this contract, and again, it was already a close call. And so far, especially the so-called Jusos, the Jusos this is the youth part of the Social Democratic Party, and their leader already said, well, guys, all to you people in Germany, and remember, he's a Social Democrat himself, so it's his party. He said, well, guys, I invite you to become members of the Social Democratic Party here and vote against such a potential coalition contract. And now the leaders of the Social Democrats start to think about ways to somehow avoid this. Because, and this is the thing, in Germany, many people are really sick of this grand coalition. And by the way, they are also sick of Chancellor Merkel herself. And it's obvious that there's some tensions at least building. One good, or one, if you want to see this, it's not just a feeling. Well, have a look at the success of the so-called Alternative for Germany. It's the AfD. That's a let's call it a right-wing party who gained some tremendous success. Right now, they're the third strongest party in the German parliament. Why I mention all this? Well, I mention this because I think if such a grand coalition is not taking place, and the political vacuum here in Germany continues. And by the way, we're only talking about weeks. It will probably be a topic in something like a month, probably 1.5 months. Then such a development here in the euro is definitely not sustainable. And in the midterm, I think a euro USD at 125 is not justified. So if those two parts come together, first of all, the developments around the political situation here in Germany, plus now probably reading between the lines, Mario Draghi's quite direct comment today on the comments from the U.S. Administration here around their intervention somehow in the exchange rate in the U.S. dollar. Well, if you combine this, it's probably one good reason to be really skeptical if this is not potentially a blow off here, which could then be sold in the next weeks to months here aggressively. So short-term level, which I like to watch here, by the way. And now let's come to the trading-related aspects. I think this is a level here to watch. So I think it's not a horizontal line directly, but we're talking about the region 124 around. So if we're pushing down below 124, and we can already see the euro right now correcting most of those gains. So in the high, where we're trading around 125.40, now the euro is coming aggressively lower. So we're talking about 70 pips of the highs. And not sure, but there's definitely some potential on the downside, which could probably push us below 124. And if this really happens, then let's have a look here at the 4-hour chart. There's further room on the downside, which could at least push us down towards 123, another 100 pips. So we are fine as long, from a technical side on the 4-hour chart, we are long as fine as we trade above let's say 121.60, 122. If we break below that level, there's another further room on the downside to 120.80, 121. Then, yeah, probably further room on the downside if, again, the developments in Germany, especially in the political landscape, develop the way as I described them. So that's definitely something worth watching. It's also not very positive for the DAX, by the way. So even though some might say, hey, if the euro pushes lower, isn't that positive for the DAX? Yes, it is. But if the main driver is political uncertainty, even though we know that political legs usually have political markets usually have short legs, nevertheless, it's definitely something to worry about here in the long term, and it could definitely mean that the DAX probably could sell off more aggressively. So let's just see how the developments now in the U.S. equity markets develop in the upcoming minutes. Then, very interesting, in fact, to note that also you could see yesterday that the US dollar seems to have some impact on the current drive higher in the US equity markets, or the other way around. If the US dollar currently weakens, that seems to drive US equities higher, while it's also the other way around. If the US dollar then strengthens a little, only a little, I mean, look at this aggressive drop here, that's something which is definitely holding back US equities here. And it's a very volatile market environment, meaning nothing more than market participants aggressively shorted volatility, meaning every small spike in volatility can cause kinds of domino effects, then accelerating even faster. And it wasn't only last week on Tuesday when we saw a more aggressive drop here. Therefore, have a look here. Something you can see here, the market dropped sharply after the market opening here of something like 400 points, recovered then some of those losses into the evening. We saw something similar yesterday too. And now look what's happening here. So the market pushed above 26,400 points now, and we are right now starting into the trading day. Oh no, we are not trading starting, because this is not the current chart. Let's go over here. So here's a 50-minute chart. And so the thing is that if we are now pushing lower from here again, and probably do not find support in this region around 26,300 points, and it's only 50, 60 points to go from here, then we could easily attack those lows from yesterday again. Based on main driver, US dollar strength currently, even though we should be a little careful probably to talk about US dollar strength. And this in mind is something which is not positive for the DAX at all, again, because if the euro strengthens, usually this weighs on the DAX and is holding it back from pushing higher, while if the euro loses some of the gains against the US dollar, this is driving US equities lower, which is also weighing on the DAX. So currently it seems to be a lose-lose for the DAX. Which is something I should worry about if I'm, again, positioned long here. But again, to explain to you this position, it's a systematic approach I'm trading here. So meaning I have no real chance to ignore the to ignore the signal here, even though I can, and sometimes I in fact do discretionary intervene here. Main target then is to optimize the positive expected value of my trading approach and trying to make it even more profitable, making sure that I on average gain more, lose less, try to increase the hit rate. But in fact, so far the system went long in the morning, and that's something I have to trade then. Yeah, I have to trade the signal and then just see how developments take place now in the upcoming minutes here. Let's see. So far, you can see that U.S. equity markets right now, the Dow Jones here, this is 50-minute time frame, has some difficulties right now. Again, if it pushes lower, I don't see it as a big problem, since if we find support here around this region of these highs, these are the highs which went back here, or to which levels we retraced yesterday. This potentially first long trigger against which we probably then see the Dow Jones gaining again, but at least we need higher highs here than not just in the Dow Jones, but also probably stabilization around the current levels in the Euro USD to see the DAX then making it to the level I was just referring to, which was here, the region on the high around 13,440 to 450 points. If we don't make it above that level, but instead are now breaking out here on the downside, I think the problem could be that the problem could be that the DAX easily could push as low as 13,130 to 150 points in the upcoming days then. So upcoming days means into the weekly close, in fact. So we are Thursday, so it's possible that we get to see quite red close then on the in the US, not just in the US equity markets, but also and especially the European and here in the DAX. So okay, so that's it from an analytical perspective. Let me just do the following. Bring this chart over here so that I have my position still visible and can intervene if necessary at all. Now let's have a look here at the approach we plan to trade. So, in fact, this is the definition of the setup if we plan to trade or set up a trade here. In fact, it's difficult to bring up a trade during this event now. This has to do with the fact that we have to wait till the open range is defined here, which will take what takes place between 2:30 p.m. and 3:15 p.m. GMT. And so since this event here ends at 3 p.m. GMT, we miss 15 minutes here, which are still necessary, even though we can look at it from an example from yesterday here, and how such a setup would look like, what you do. In fact, it's only these 3 steps here we have to take care of. So in fact, we define again the open range between 2:30 and 3:15 p.m. GMT, so within the first 45 minutes of trading, and then we identify the advantage based on Dow theory, or, and this is what we will do, or we do this via the 50-minute exponential moving average 10, and then we trade the break of the open range in direction of the identified advantage. So to give you an example, this is, by the way, a setup which you can easily adopt to the Dow Jones and the S&P 500. What I know is that the Dow Jones is way more active traded asset here, way more active traded CFD, even though I favor the S&P 500. So if you ask me why, it has to do with my past. I was trading actively futures before I then entered the world of FX and CFD trading, and especially here in terms of research and education and all this. That was when I was trading the future here. I was trading the S&P 500 future instead of the Dow Jones future. So that's the reason for that. I never really changed this behavior, even though both two markets are strongly correlated to each other. And So now let's have a look here what happened yesterday. The great thing about yesterday is that we had a mistrade, so we had a losing trade here, which was stopped out, in fact, because the market broke out of this open range here at 4:30 German time. So this is 3:30 p.m. GMT, was entered long, and then the market dropped lower. That was a little unfortunate since the market was stopped in, was really close stop in into the position, and then just fell down. Yeah, let me just show you here the open range first. So in fact, it's 3:30. The low is 8:45. Yes, 8:45.25. So I will have it here then. And let's make this pink. So, and probably dot this line or so. So to make it a little more clear here what I'm talking about. And yeah, so what do we do? So very easy. We look at the range here between 3:30 and I'm sorry, 2:30 and 3:15 p.m. GMT. We look at where's the high, where's the low. So the low in this range or within this time span could be found between 2,845.25. The high could be found here. Oh, by the way, I'm sorry. I just have to duplicate this here to this level. So the high is here in this candle. I'm sorry, no, it's slightly below that, in fact. So it's here. So what we do is we say, okay, within this range, we have now our entry point, respectively. We have our, so currently the DAX, by the way, is tanking now, trading down to 13,330 points, similar to yesterday, by the way. So US equities are also tanking a little, while the euro is stable at 124.90, so around 125. So that's not good at all. So in fact, just let us have a look. I just hope that. Yeah, okay. So we are currently pushing below this level here. The lows from in the morning. The question now is, is this probably a fake out on the downside? Happened several times. And the interesting thing is, if you look at the hourly chart, you can also see that this region here is a potential long trigger. It's former highs here from the 16th of January. And that way, potential support for a corrective move against which we then could try to position ourselves long against them, and then consider long engagement. So in fact, it's very interesting development right now. What's happening here with this push lower? Let's just see. This is, by the way, one thing. Some of you might now be surprised a little that I'm quite relaxed. Again, I'm long the DAX, so seeing such a drop here is probably something which causes some nervousness. It doesn't, in my case, because the position is adequate. So, and my stop is also based on a systematic approach I'm trading here. And if you know what you're doing, if you know you're trading with a positive expected value, you don't get curious, respectful, emotional, especially once such a drop happens here, because everything is set up. So from risk and money management perspective, from a system approach, everything's fine. And you just can't do anything else than manage the position accordingly. In this case, just wait and see and what happens. Hopefully position gets not stopped out, but instead turns probably around. And if not, well, probably I find a way probably to scale out of the position or so. But all in all, you can see that it's obviously part of a bigger plan I'm trading. So I'm not looking at this one trade alone, but in fact, even if this trade is stopped out, it would bring me to break even for the week, since it would take back the gains I made yesterday on this trade. Because yesterday, for example, I was short based on the system, and I profited from this drop here on the downside. And nevertheless, didn't become enthusiastic about this too. So that's probably also something worth mentioning here in this context, and why having a trading plan and having clear, not just a clear plan, but also strict risk and money management, and knowing what you put on the table, and you're willing to lose this amount of money if everything goes wrong here. Why this is so important in trading in general. So now let's come back again here to this setup to give you an idea of how to trade it. Then, if we exit here this event, so that you know how to work out the setup yourself based on these parameters. So, one sec. Okay. Okay. So, okay, perfect. So let's come back here to the chart. I've already prepared this, obviously. So here's the S&P. So this is yesterday. This is the high. This is the low. So now we define this range, and then we say if we trade above this, in this case, yellow line, we are trading breakouts on the upside while placing the stop here at the low of the day. And if it's breaking on the downside, we're placing a stop above the highs here. Therefore, we have to trade below the exponential moving average 10 on a 50-minute time frame. In fact, that's the setup. So meaning, again, you have the high, you have the low within this range between 2:30 p.m. and 3:15 p.m. GMT. You take this high, you take this low, you place an entry, respectively a buy stop here at the low, at the high of the range, and you place the stop below the range. And then if we trade above that yellow line, you trade the break here long, while you can also place a short order. And if you trade below that level, you trade the short. You place a sell stop here, and you're triggered short, placing a stop above these highs. That's it. Okay, and so then you ask about the exit. It's if the position is not stopped out, as yesterday already, or obviously. So you can see here we're stopped into the trade, and then the market just headed lower and broke lower. Never made it back, by the way, above this breakout point here. So if this does not happen, this breakout here, you take out the trade at 8:50 p.m. GMT manually. And that's it, in fact. So now you might wonder, okay, that sounds really easy. Is this really profitable? In fact, it is. It's a highly profitable trading approach for years, in fact. And therefore, I just want to show you a chart I usually present right at this moment then. So I held this webinar together with another guy from JFD Brokers. He is the quantitative manager, a PhD in physics. His name is Stefan Friedrichowski. Again, yeah, PhD. And so what he is an expert in is producing such Excel files here, in which he then backtests based on the data sets he's getting. He tests those strategies, and was capable. Or what he did was he said, well, for this webinar, I will run such a backtest here for your strategy, your approach. This is what he did. And the reason why I took the screenshot here is very simple. So in fact, I took the screenshot for only one reason, because he had some trouble with his internet when we held this presentation together. And so right in the moment when I took the screenshot, his connection broke up. He was capable of rejoining a little after. Nevertheless, I was capable of just keeping on presenting the people, the content here. So just if you're curious why I have this, this screenshot here. So that's the story behind this. And what you can see is that the backtest here was run 7 years into the past. So in fact, we held this webinar in July 2017. So the backtest started in November 2010 here. And yeah, what you can see is that the market obviously, or that the equity curve here obviously pushes higher from the lower left to the upper right, which is usually a very good sign. And yeah, so in fact, it's a profitable trading approach with a win rate here. You can see this of 47%. and a payoff ratio of 1.3 to 1, which means that on average you make for every dollar or euro or whatever you lose on average, week 130. And that means you can then calculate the so-called expected value, which says that on average for every euro you risk, you're making you're making 8 cents. So now some might say, well, this is not very much, right? Depends. I mean, if you're risking 1,000 euros, you're making on average 80 euros. Now the thing is that you make these 80 euros on every trade, and it doesn't matter if you're winning, if it's a winning or losing trade. If you can stabilize those parameters around the win rate and the average profit and the average loss, there's no other chance than in the long run turn out a profit based on these calculations around the expected value. And this is how this growing equity curve then can be explained, and why this is in fact a very, very profitable trading approach. Many people fail to just trade through this because it looks so easy and doesn't look as if it's really, it can be profitable, because trading has to be somehow complicated. And many people use tons of indicators in their trading and try based on them to really catch those trades which are 100% winning trades. Well, this, first of all, it's not possible, since trading is always related to risk, that you're losing some of your money in every trade. How profitable and how likely it might look that the market will do this or will do this or the other. It's just not possible to tell whether a trade will be a winning or a losing trade. And so that's one reason why people think that this can't be profitable, but in fact it is. So this is these are the input parameters, and this is the a trade setup on which this equity curve is based on. And it's showing that it's obviously working out. You can adapt this, by the way, to many markets. It's not just U.S. equity markets, S&P, Dow Jones here, but you can also adapt this to the DAX, for example, but also to FX pairs. Then we are talking about so-called Asia breakout scenarios, but it definitely works. It does. It really does, and it's highly profitable. Yeah, and so that's it here on this front. Now let me just see whether there's a question coming up or not. No, it's not. Yeah, are there any questions? Is there anything I can answer you in terms of your yeah, of what I just presented here? Okay, so let me just double check here on another. Okay. So no questions. I usually take this as a very positive sign, since this means that the people really enjoyed what I had to say and really understood what I had to say. That's even more important, I think. Yeah, probably let's switch again into the market here. So DAX is still having some trouble here. Let's see whether he can stabilize into the evening. I mean, don't get me wrong. It's not that I like what I see. So everyone likes to see a trade which is running the right direction. This is true for me too. Even though, well, I can't do anything about this. I mean, I could take out the trade. You can't imagine how many times I did this with other systems, intervening in a running position, at the end seeing that if I hadn't intervened, well, the trade would have turned out a profit, or in fact a smaller loss or whatever. So in fact, I can't do anything about this. It's just like wait and see, and somehow hope. Even though some probably misinterpret this when I say I hope for the market to recover, since it's not just really hope. It's like, I mean, I know that this approach is profitable in the long run, and this is only one trade. And again, compared to yesterday, it's not even covering the gains from yesterday. So after this, I'm still ahead. So nevertheless, again, I'd really appreciate to see the market turn around. That's definitely something we can agree on, but I highly depend on the developments in the euro here. That's, by the way, something probably some might be interested in. In fact, I consider this development already in the US equity market as interesting. So we are not aggressively pushing lower. Probably this will then come in the upcoming minutes. Could happen, yes. But all in all, it's already some kind of positive that the market is not pushing lower. So in fact, I wouldn't be surprised to see the market turn around again into the evening here, even though some might say, is it really possible to see the market rising still rising higher from here? This is a daily chart. Doesn't look this a little extended? Yes, but it looked extended here too. There was no pullback too. So it's a daily chart nevertheless. You can see it here. It took off from there again. And I can tell you, based on my personal experience, the market, it shows when it really wants to go lower from here, even though the DAX is doing exactly that. But the main reason, again, is what's happening in the euro. So Draghi, put this in quotation mark, failed to down talk the euro. Euro can stabilize at an elevated level, pushed as high as 125 and higher than that. So this is definitely weighing on the DAX right now. Yeah, let's just see how things develop here in the upcoming minutes again. So key level will be, or can be found here around 124. If we push below that, not necessarily today, but this is definitely something the bulls probably should be worried about and probably see as a good reason here to then consider short engagements. Yeah, and so that's it. Still no questions. So I'm not sure. So if there are no questions, then I just say happy trading and watch your stops. Talk to you again in 1 week, again at 2 p.m. GMT, respectively London time. Yeah, so it was nice to be here. Much appreciated. And yeah, so that's it from my end then. Again, happy trading. If you want, please follow JFD on YouTube. You can find YouTube. I mean, you're obviously at YouTube right now, but the YouTube channel here from JFD Brokers can be found here on the search. Follow us, and there you can see already. That's a colleague of mine right now covering the US opening bell. It's an English-speaking webinar. I'm sorry, it's a German-speaking webinar. I'm sorry. But we have English-speaking webinars here on a daily basis. So meaning the morning meeting taking place every day at 10:30 a.m. GMT with an overview of the markets, trading setups, and all that. So please feel free to subscribe to the YouTube channel and then just join us 10:30 a.m. GMT every morning. I'd love to answer your questions there. And yeah, so that's it from my end. Happy trading. Watch your stops. Talk to you next week or in the next morning meeting. Have a nice evening. See you and bye-bye.